Hey guys, Chris from Adapt Tuition here, and in this video I'm going to show you how to do a manufacturing account, or as it's known at the CAPE level, a schedule of cost of goods manufactured. Before we get into it, I want to let you know a couple of things. One, there is no one right way to do a manufacturing account. There is no fixed format. It's not a financial statement governed by any international accounting standards or international financial reporting standards. It's actually not part of financial accounting, which is where you create income statements and balance sheets, that kind of stuff. This is part of cost accounting or management accounting. It is done for management use, for internal use. So it doesn't need to be governed by those standards. So I'm curious, if anybody here after watching the video, if you see that my format is different from the format that you use or you've been taught, please let me know in the comments below what differs between your method and my method, or your format and my format rather. And the other thing is, as you go along watching this video, you may want to make some notes. So be sure to grab a pen and some paper and jot down any interesting points. Or if there's something that I explain and you still don't really understand from this video, write it down, and of course let me know in the comment section below, and I will do my best to get back to you. Okay, with that covered, let's get into it. Alright guys, so let's start with some easy questions to warm the brain up. So first question is, why do people get into business? To make a profit. How do we calculate profit? Revenue earned minus expenses incurred. How do we earn revenue? We provide either a good or a service. Where do the goods come from? Well, we either buy them or we make them to sell them again. Okay, so I'm going to pull up a trading account now to help me illustrate what I'm talking about here. So when we buy goods to sell, that's called purchases. Purchases makes up part of the calculation in the cost of goods sold. However, if we are making goods to sell rather than buying goods, then there won't be a purchases figure, will there? No, as a matter of fact, there won't be. So what does that mean? Well, the thing is, when we make goods, we have to spend money to make the goods. And the cost of making the goods is what's going to replace the purchases figure in the cost of goods sold calculation. So what that's going to be called is called the cost of goods manufactured. And that is the purpose of doing a manufacturing account, or a schedule of cost of goods manufactured, to capture all of the costs that go into making the goods that we provide in order to help us calculate profit. So the question is now, what are the costs that are involved in the manufacturing process? Let's take an example. So most of you guys have graduation coming up soon, right? And I guess you want to go to grad in a nice fancy suit or a nice dress. So maybe you don't want to go to the store and buy one off the rack, you want to get one custom made. So the first thing you're going to need is material. The next thing you're going to need, unless you're making your suit or your dress yourself, is someone to make it for you. And that person is probably going to need some kind of tools, equipment, supplies in order to make this dress for you. So here we see three components of production cost. We have the materials, we have the labor, and we have other costs, which we will call overheads, and I'll explain why in a little bit. Now, this breakdown can be taken and applied to almost any manufacturing process, any particular situation. So always bear in mind that the cost information you are collecting are for materials, labor, and overhead. And there is one other item that will go at the end of the manufacturing account, but I will explain what that is a bit later on. Okay, so what we're going to do now is take a look at a very simple manufacturing account. I'm going to pull it up here. So you can see across there we have a line for materials, a line for labor, and a line for other costs or overheads. And I'll tell you why they call that in a little bit, okay? So this is basically the gist of the manufacturing account. And as you can see, the total is called total production costs incurred. It could be called total manufacturing costs incurred, cost of goods produced, total current period costs, all sorts of stuff. There's no one right thing to call it. If, however, you know different because of whatever reason, tell me specifically what it's called and tell me why you know that. Give me a textbook reference or a website reference or whatever the case is, okay? Now, we of course know that the manufacturing account, those of you who've seen it know it isn't this simple looking. There's a lot more detail to it, and yes, we have to flesh it out. But before we flesh it out, we have to get familiar with certain what we call cost classifications. What are these cost classifications I mentioned just now? We have two. Before I tell you what they are, I want you to think about something first. Let's go back to the example with the grad dress or the grad suit. When you first engage the seamstress or the tailor, you carry the material to them, and what do? Well, they sit down or stand with it or whatever the case is, and they convert it. They use their materials, their needles, their threads, sewing machine, they have whatever they use, right? All these things, and they convert that raw material into a finished product. And when you get the finished product, what do you get? Well, you get a suit or a dress, but it's made of material which you can see, touch, feel, you put it on, and the material is put together and cut and stitched in different ways to look like whatever it is you wanted it to be, a dress or a suit. And of course, the finished product looks markedly different from the raw materials that went into making it. So I want you to bear in mind some things here. The material and the labor that went into making that finished product, those things are called direct costs or prime costs. Any cost that is directly and easily traceable to a finished unit or finished product, those costs are direct costs. So the materials, the cotton or whatever other material that went into making the dress or the suit, that's direct. You can see that on the finished product. The labor, well, you can see exactly what the dressmaker made or the suit maker made. That's not up for debate, right? Now, the thing is, like I said, I mentioned that the tailor or the seamstress may have had other materials, they may have had other equipment or machinery, a sewing machine, they may have had to use a glue gun, all these different things. They may have paid rent on the building that they occupy. Now, those costs, for example, rent, you don't see any of the rent on the suit or the dress, do you, right? The glue gun, maybe, I mean, I'm hoping you don't see any glue on your suit. We know some might have gone into making it, but we may not know exactly how much, right? When the suit or the dress is on the mannequin, sometimes they have to pin up certain things, and they may have a marker to mark certain things. How much of the marker ink is on the finished product or was used? How many pins were used exactly? What about the depreciation on the sewing machine? What about if they had to hire a cleaner to clean up after them? That person's labor is definitely not seen on the finished product. So we have certain costs, certain items that the cost of which, right, certain items, that are seen on the finished product, the cost of which are direct costs. And then we have other items, materials, labor, or other, where those things are not seen on the finished product. So those items, the cost of those items are classified as indirect costs. And we call them overheads, and I'll tell you why now, right? Because if you think of, for example, rent literally puts a roof over your head. When you pay for electricity, most times lights are overhead as well, right? Air condition, all that kind of stuff, Wi-Fi, well, Wi-Fi is all around you, so that's not really overhead. But long story short, they took to calling indirect costs overheads because it just basically put everything over your head you had to use. So we have direct costs, the costs of items that are directly and easily traceable to finished units, and we have indirect costs. The costs, those items or those costs that are not necessarily easily or directly traceable to finished units, but were incurred in the production environment and hence must be included in the total cost of production. Okay guys, so what we're going to take a look at now is a slightly more fleshed out manufacturing account. Let me just click a button and we will see it. Poof! Nope, I guess that didn't work. Ah, there you go. Right. Okay, so example one, manufacturing account, most items. So we have, as we can see at the start, direct materials, direct labor, other direct costs. I'll talk about that just now. The total of all direct costs is called prime costs. You can call it total direct costs, but most times we call it prime costs because those are the primary costs of production, the costs that went primarily into making the finished unit. Of course, we know we have to add overheads because without the overheads, we probably would not be able to engage in those production or manufacturing activities. So you're seeing indirect materials, indirect labor, rent of factory building. We've talked about rent before, depreciation on factory equipment, factory power or electricity. The total of that section is called total overheads, and then we have total production costs incurred. Now, I want to talk about a couple of items here. First one is the other direct costs. So we are okay with the, I'm hoping we are okay with the materials and the labor because those things can literally be seen on the finished product. Other direct costs, what are some examples of other direct costs? Well, I can tell you off the bat, we have things like trademark fees, copyright fees, license fees, franchise fees, in some cases, and as I've come to learn recently, packaging, right? Now with the exception of packaging, all those other things mainly have to do with paying for the permission to use other people's intellectual property. So if you didn't pay those fees and you used people's intellectual property, you could be open to legal action. You could get sued. So paying those fees is directly related to being able to produce whatever it is you're trying to produce, which is using other people's intellectual property, right? So other direct costs go there. Usually the question is very specific about what goes there. Most times I've seen other direct costs, so it's relatively simple. Other times I've seen franchise fees, license fees, trademark fees, copyright fees. And sometimes they're kind enough to give you a note in the additional information section. If not, well, like I said, I hope you have your pen and your paper and you're taking notes, all right? Okay, and then other overheads, indirect materials, indirect labor. So what are these materials? What materials could be used that don't go into the actual finished product? Well, think about it. Right now, whenever you're watching this video, this is March 12th, 2020, and we have the worldwide, I don't want to say outbreak per se, of coronavirus, the situation right now. And I have a responsibility to keep my classroom clean. So no, this is not a plug for this particular product, right? But I use this to wipe down my desks every day. And the thing is, that is not directly involved in my teaching, but it is involved in my classroom experience per se. I mean, I have to clean. It would be irresponsible of me not to clean, wouldn't it? So the cost of that stuff can't go into the cost of my, can't be classified as direct cost because it's not directly traceable to my lesson. Right, but it does form part of my cost structure. It was spent, right? So those materials could be considered indirect. So cleaning materials are usually indirect, right? Indirect labor. What is indirect labor? Well, if I had someone come here to do my cleaning for me and I paid them, that would be indirect labor, right? Even if I do it, that part of my labor is not related specifically and directly to my lesson preparation. So therefore, that could not be classified as direct labor. So any labor that is not directly involved in the production of the finished units or the provision of the service is indirect labor. Interestingly enough, most questions have, you might see a factory manager's salary or factory or production supervisor's salary. So even though you think, okay, well, that person works in the factory and they're related to production, so it must be direct. Interestingly enough, the answer is no. The factory manager, as a matter of fact, usually does more paperwork than production, if any production at all. The production supervisor supervises. He or she may not be directly involved in the production process. They may be advising workers and doing a lot of other tasks that are not directly related to production. So usually once you see the word salary, most times that is indirect in nature. Wages, the keyword wages, that is direct. But I have seen questions put indirect wages. So I don't want to tell you that salaries are always indirect, wages are always direct. Read your question carefully and look for those key phrases or those explanations in the question. So that was other direct costs, indirect materials, indirect labor. Okay, so those are the three things I wanted to explain. So now what we're going to take a look at is the fleshing out of the material section. All right, guys, so let's take a look at this example here. So we have opening stock, purchases, closing stock, and all of these are of materials specifically, right? Remember, when you are manufacturing goods for resale, it's unlikely you are buying goods to sell as well. It's not impossible, but we're going to keep it simple and straightforward for now. Now, you'll notice that these components resemble components you might regularly see in a regular income statement question, specifically for the cost of goods sold section in the trading section of the income statement. So if you need a refresher as to what the logic is behind this calculation, I'm going to put a card up there so you can take a look at that video on how to do trading accounts, and it'll walk you through the logic of the cost of goods sold calculation. Now, it's one of my earlier videos, so it may not be as good as some of my later videos, but still, it's worth a watch for the logic, okay? Now, let's take a look here and see what the calculation of the cost of materials used or materials consumed by production is going to be, right? So cost of direct or raw materials consumed. Now, when you are writing your words, you don't have to put direct and then raw in brackets. You can put cost of direct materials consumed, cost of raw materials consumed, cost of materials consumed. So $, let's go. So opening stock of raw materials, add the purchases of raw materials, which is going to give us total materials available for use, or costs of materials available for use rather. And from that, we're going to subtract the closing stock, which is going to give us the cost of materials consumed by production, right? Now, I did mention that you're not going to see me put opening stock of raw materials, of direct materials, or purchases of direct materials and closing stock of materials, because it's under this section, this heading, which says cost of materials consumed. So everything there should be assumed to be materials. All right, so I think that's a safe assumption. All right, so of course, we know from our trading account or cost of goods sold calculation, we have a couple other adjustments to make to purchases. So I'm going to take a look at that right now. So just give me a sec and don't know why I did that, but okay, cool. All right, so in example 2, we have opening stock, purchases, carriage on direct materials, and returns upwards in addition to closing stock. So remember, carriage is basically their way of saying delivery or transportation. And I've seen them use the word transportation of materials, delivery of materials. So remember, we add that to the purchases figure. Like if you call for delivery for food from home, you'd have to pay not just for the food, but for the delivery, which would increase the total amount of money you have to spend. Hence, that is why we include or we add the carriage on raw materials to the purchases. Returns upwards, if they brought the wrong thing and or they tried to give you more than you ordered and they had it on your bill, you have to send it back. You can't pay for what you didn't order. So therefore, that's why we subtract the returns upwards from the purchases. But let's take a look. So cost of direct or raw materials consumed. So let's start with the opening stock of 300,000 plus the, so we're going to shift across a little bit to the purchases. So 10,000 is the carriage on direct materials, which gives us 260. We minus the 30 for returns upwards, and that gives us net purchases. These items here, right, give us this. So we don't necessarily want all of this detail in this column, right? So that's why we use separate columns to shift out certain details so that we can keep certain columns clearer than if we had extra details in them. But the details are there nonetheless to the left. So if we want to see those details, we can. So now we have the total cost of material available for use, which was the opening stock, plus the net purchases. And then we subtract the closing stock, and that'll give us the total cost of materials consumed in production. Okay? So, if you need to rewind and go over that again, that's fine. But what I want to do now is I want to put this in the larger context of the manufacturing account. All right, so what we're going to take a look at now is the expanded cost of materials section in the manufacturing account as a whole. So the information, as we can see, is on the left-hand side. So we have opening stock, purchases, carriage on direct materials, returns upwards, closing stock, and a bunch of other stuff. So let's take it one thing at a time. Okay, so yes, your manufacturing account should be headed up, and it should say, right, manufacturing account for the year ended 31st, well, whenever the period ended is. Okay, cool. So let's get some dollar signs going there. So we're going to head up cost of materials consumed, and opening stock is to start with. Then we have the purchases, the carriage on direct materials of 10,000, returns upwards of 30. Oh, sorry, we have to add those to 250 and 10 is 260, minus the returns on the materials, which is 30,000, which will give us a net purchases figure of 230,000. We're going to add the opening stock and the net purchases to give us 530,000, which is the cost of materials available for use in production. You can write out that whole thing if you want, or just put cost of materials available. We have to subtract the closing stock from that of 400,000, giving us cost of materials consumed 130,000. Now, that's the first item in our our prime cost section, to which we add direct labor or factory wages, as it's called here, 250. Other direct costs, 200,000. They didn't detail what those other direct costs are, so we just put it. We total those three things to give us total prime costs, or just prime cost, and to that we have to add overheads. So our overheads start with the indirect materials, 50,000, indirect wages, 75, factory depreciation, 125, factory lighting and heating, 25, factory rental, factory insurance, giving us a total value overheads of 300,000, and total production costs incurred is the sum of the prime costs and the total overheads. You can put something saying total overheads here. So total overheads, right? But you don't necessarily have to. Okay, so that is how the manufacturing account looks so far. So we're going to take a look at another example now, which of course has some little complications. Okay guys, so in this example, we're going to take a look at expense items that have to be split between the overhead section in the manufacturing account and the expense section in the income statement. So let's get the regular stuff in the manufacturing account in so we can see how to proceed with this. So opening stock, so let's set up manufacturing account for the year ended whenever, dollar sign. So first thing to do is the cost of materials consumed. Opening stock, 300,000. Purchases, and so we have carriage and we have returns upwards, so we have to adjust for those. So purchases is 250, add carriage on direct materials 10, which gives us 260, minus the returns upwards of 30, giving us net purchases of 230, added to the opening stock of materials will give us 530 for cost of materials available for, this shouldn't say sale, let's take that out, available for use in production. Right, from that we have to subtract closing stock of the 400,000, which is going to give us cost of materials consumed 130,000. Direct labor, factory wages 250,000, other direct costs 200,000, and then total prime costs 580. Overheads now. So we have indirect materials 50,000, indirect wages. Now we have 4 items and we have 4 notes. So I'm going to maximize this side here so we can take a read of those notes. So depreciation is to be split equally between factory and admin. So this depreciation items. Now why might this happen? So let's say, for example, you have some machinery that is used specifically for the factory and some that is used for the office or non-manufacturing. So in that case, whatever is specifically for non-manufacturing should go in the income statement. What is for manufacturing should go in the manufacturing account. Never put non-manufacturing items in the manufacturing account. Okay, so here, so let's say maybe there was one machine, or let's say the value of machinery was equal between both of them and they use the same depreciation rate, so they say split equally. So what we're going to do, we're going to do 250 divided by 2, which is going to give us 125,000 here, and in the expense section in the income statement, if you had to do one, you would see an equal amount for depreciation there. Let's go back and see what the next note is. Lighting and heating are to be shared between the factory and admin offices in the ratio 5 to 1. So lighting and heating is 30,000. So how do we treat with ratios? Well, 5 plus 1 will give us 6, and then you put each number over that total. 5, 6, 1, 6. So 5, 6 of 30,000 is going to give us 25,000, I believe. Right? So of course, lighting and heating. So maybe the factory uses more electricity than does the admin side. So it may need to get a greater share of the electricity or the lighting and heating than the admin side. All right. What about now? Rental fee should be apportioned 20% to factory. Let me maximize so we can see the rest. 80% to admin. Okay, so it means 20% goes to factory and 80% goes to admin. So all we're going to do is find 20% of that 100, which is 20,000. And insurance. So insurance of 10,000 is attributable to the admin side, and the remainder is attributable to the factory side. So 10,000 from 15 will leave us with 5,000. So it looks like we're going to have 5,000 in the manufacturing. So our total overheads is 300,000. Now you're going to add that to your prime costs. All right, current period costs 880,000. Right. So as you can see, it actually does kind of resemble an income statement with almost like a trading section on top. You even have almost like a cost of goods sold calculation here. And down here, the overheads kind of resembles the expense section in the income statement. The major difference is, of course, this is not revenue. Right? They are all expenses. So instead of taking prime costs and subtracting overheads, you're not going to do that. All the costs are added together to give the total production costs. Okay, guys. All right. So that's this example. We, of course, have something else, a little complication. So let's take a look at that. Okay. So the last thing that we need in order for this manufacturing account to be complete is the adjustment for something called work in process. Alternatively known as work in progress, or just WIP. Work in process is simply work that has not yet been completed. So you guys know sometimes you might start an exercise for homework and you don't finish it. Right, that's like work in process. You'll probably come back to it later, the same day, or maybe the next day, and then put more work in and finish it. Same thing with production. Sometimes a batch of goods is started and then the day ends and certain ones are completed, certain ones are not. And then whatever is not completed is carried forward to the next period and completed there. So what is the implication therefore for the manufacturing account? So let's take a look at the example I have on the board. So this is actually the same example from just now, and instead of starting from the top and going back down through all the same thing we just did, I just left it as it was. The only new things we have are these two items here, the work in process at start and the work in process at end. So I'll tell you what we do with them and then I'll tell you why. So there are a couple of presentations for this and I'm going to show you both of them. The first presentation is what I do. Right, I make an adjustment for the work in process. So we have the work in process at start, we minus the work in process at end, and then whatever the net figure is there is combined with the current period costs to get the cost of goods manufactured or completed. Now in this case, the work in process at start was greater than the work in process at end, so you had a net positive figure. If it's the reverse, you're going to have a negative figure. If this was -5, as in if the work in process at end was, let's say, 85, this would have been a -5, and you would have subtracted it from the 880 and gotten 875. Right? An alternative presentation for this, oops, I'm going to have to zoom in a little bit for this boy. All right, so let's go back down. So the same 880 is down here, and you're seeing the same 80,000 work in process at start from across here. It's added to the current period cost, or total production cost incurred in the current period, giving us 960, and then we subtract the work in process at end, as we see here. All right, so some people prefer this format, and some people prefer this format, where it looks, you do an adjustment first and have a net figure. It does not matter which one you do. Neither one is more right than the other, right? So let's talk about why we add let's talk about why we subtract work in process at end. So remember, what we're doing is we are transferring this figure to the income statement in place of the purchases figure, because remember, because we are making goods, we don't have a purchases of finished goods figure. We have to compile all the costs of manufacturing goods and put them in place of the purchases figure in the income statement. But if we didn't make some goods, would they be ready to be sold? No, I don't think so. So you can't have goods that are not ready for sale, the value of those goods included in the cost of sales or cost of goods sold section. So that's why we subtract the work in process at end from, well, in the manufacturing account. And then that is going to be carried forward to another period. More work is going to be done on it. So it means that in that future period, you're going to have some more, you may have some more materials, more labor, more overheads required to complete those goods. So the work in process at start kind of becomes wrapped up in the current period's production costs. And of course, if you have any of those goods still in process after, that's where we subtract them out. So long story short, you add your work in process at start and you minus your work in process at end. Okay guys, so one more example and then we'll call it a day. So we're going to construct the manufacturing account for this information on the left hand side here. So head up, manufacturing account. Of course, if there was a name for the company, you put name. For the year, for whatever period ended, whenever it is, $signs. So cost of raw materials consumed, or cost of direct materials consumed, or whatever you want to call it. So the opening stock is 180,000. So we have purchases, but we have carriage and returns. So we shift one space to the left. Purchases is 415. The carriage is 15,000, giving us 430. And we subtract the returns upwards of 10,000, giving us 420,000 for net purchases of direct materials. We add that to the opening stock and we get cost of materials available for use, which is 600,000. We subtract the closing stock of raw materials, which is 200,000, giving us cost of materials used, 400,000. Direct labor factory wages, 320,000. Franchise fees. So franchise fees. So if you go down to the additional information section, you're going to see franchise fees are treated as a direct cost. So after that, we have factory manager's salary, and factory manager's salary is indirect labor. Okay, so let's total up all our direct costs. I get prime costs of 800,000 and head up overheads. Right, so factory manager's salary 72,000. Indirect materials 20. Now let's take a look, because I'm seeing item 3 is depreciation. Let's just open it up here. So depreciation is to be split 80% between factory and admin respectively. So 80% of that goes to the factory. So we're going to do 96,000. Then we have lighting and heating. Let's see what it says. Lighting and heating to be shared between factory and admin in the ratio 2:1. So that's a 2/3, 1/3 split of 75,000. Which is going to give us 50 and 25 respectively, right? 2/3 of that is 50. Rental fees should be apportioned 60% to factory and 40% to admin. Okay, so that's relatively straightforward. Just find that percentage and we're good to go. And insurance, 15,000 is attributable to factory, right? The remainder is clearly for the admin, and total overheads is 301. So we add total overheads to prime cost and the work in process adjustment. So whether you want to do it like this, where you put the work in process at start, minus at end, and then do the adjustment, or you want to add and subtract in the same column as the current period cost, that's fine. And in this case, we end up adding, so we have 1,111,000, 1,111,000, right, cool, as the total cost of goods manufactured. Ah! Ooh, that was a far jump from my recording spot. Anyways, all right guys, so there you have it. That is how you prepare a manufacturing account. So I hope I've explained everything clearly, but of course, it's never my expectation that you guys understand everything perfectly for every single video that I do. And that's why I encourage you to ask questions in the comment section below. I love to hear from you guys, and I love to answer you guys, because I never profess to know everything, and sometimes the way I explain something in the video, you mightn't take to. So I need to find a different way to explain it so that you can understand. Anyhow, I also want to do a past paper questions, a manufacturing past paper questions video, but I don't know if I'll get that out very soon. If I don't, I do have a Facebook page, and I'll put the link in the description below that you can go to and get full past paper questions for not only POA, but maths and add maths. Now, I've been going through some exam revision with my Form 5s, and I've been spotting some errors in the paper solutions, and I'm going to fix them as time goes by. So if you spot an error, leave a comment, tell me what the error is, and I will fix it. Okay, guys? Anyhow, I don't want to take up too much more of your time. So just remember, you can do anything you want to do. You can be anything you want to be if you have the correct mindset and you put in the work. Along the way, you are bound to make errors. Errors are part of life, and they help us grow. There is brain science, brain research that shows that errors help us grow, but they grow more if you have a growth mindset. The belief that you can learn something, the belief that your intelligence and your abilities are not fixed and that they can change if you put in the work. And of course, you're bound to have trouble, you're bound to encounter some roadblocks here and there, and it's okay to ask for help, right? And of course, if what you are doing is not working, then you're going to need to change what you're doing. You're going to have to try a different approach to it. Adapt, because change is the only constant. All right, guys, thank you so much for watching. Don't forget to like, share, and subscribe, and I'll see you next time. Bye.